Well, big losses for NVIDIA this past week. Does that mean that the stock is topping out? Is it time to sell the stock? Could it crash even lower? I'm going to answer those questions and show you, more importantly, how to answer those questions, how to know when it's time to sell a winner. Of course, NVIDIA has been a great stock, not maybe so great over the past few months, but over the past few years, a stellar performer. Plus, I'll do my normal market analysis. We'll figure out if the stock market is okay or if there's a risk of it crashing. And we'll go through commodities and currencies. And then finally, at the end of the video, I'm going to show you the trade of the week, a stock that basically doubled from the time I found it on Friday morning until later that day. And I'll walk you through how I found that stock and how you can take advantage of those kinds of trades as well. All right, so let's talk about NVIDIA first. The stock made a big drop because of some negative news around a AI technology from China that doesn't use as much energy, doesn't need as much computing power. And so many stocks in the sector really had a lot of weakness, NVIDIA being the one that had the biggest dollar value drop. Really not a huge percentage drop, but still a significant drop in value for the company. So the question then is, has NVIDIA seen its top? Is it over for NVIDIA? Well, let's walk through the chart of the stock and I'll show you how to make the analysis to answer that question. So first, what I want to do is draw a little picture here of how trends typically move. So typically you have a stock that's in sort of a boring sideways range. Something positive happens fundamentally, which causes the stock to break out of that range. So I call this the surprise phase, when the fundamentals get a real boost and people take an interest. Now, stocks don't go straight up. They typically will go up in waves. And these waves can happen intraday. If you're a day trader, you'll see these waves. If you're a long-term investor, you'll see these waves. The only difference is the chart time frame. If you were day trading, you might watch this on 1-minute charts. If you're a long-term investor, you might see that on weekly charts. Well, what tends to happen then is eventually the trend makes a falling top and breaks the upward trend line. And that's usually the sign that the stock is either destined to go sideways for a while or it could top out and go lower. And this is really where NVIDIA is right now. So if we look at the chart of NVIDIA, and here I'm showing the 3-year weekly chart, I'm going to draw the trend line. To do that, you start at the low and you just let a line cut across as many of the bottoms as possible. If the trend gets steeper, then you start again at a low and just let the line cut across as many, what I call inflection points, these little lower valleys on the chart. These are inflection points. And you can see that NVIDIA has bounced off of that line a number of times. What you also see is this week, it's breaking that upward trend line. So again, if that trend line is there, it's breaking through that upward trend line after making a double top. And so that's a pretty good signal that at a minimum, the stock is topping out here. In other words, it's not likely to get through this ceiling price for some time. Doesn't mean it won't ever get through that ceiling price. It certainly could. But I think the stock becomes a bit of a parking lot. In other words, it's likely to go sideways for a while. Now, in the short term, it could come up a little bit into this zone, but it could also go down. And so in my opinion, I think it's a pretty good time to sell the stock. And again, looking out a couple weeks, could it be a little bit higher? Absolutely. But will it get through that 150 ceiling price? Probably not. And therefore, I think it's just a place where you can take that money and put it to work a little bit better. And I'll show you an example of a stock that did something very similar. This is Shopify, and it was, of course, one of the hot stocks back in 2020. You can see here the upward trend line right there. And that upward trend line was broken. It then built a falling top and broke down from a falling top. And for the next year and a half, 2 years, the stock was really a disappointment. It was only when it built this rising bottom and then broke up from the rising bottom that it turned it on again. And so it's important to recognize that when I say a stock is a sell, it doesn't mean it's a sell forever. It just means that for now, it's probably more likely to go lower than higher or perhaps just sideways for a little while. Now you have to make that judgment yourself. I'm just here to educate. You make your own investment decisions. Please don't trust me to do that for you because I'm not really a licensed investment advisor. I'm just very experienced at reading charts. I've been doing this for 35 years and I know what tends to happen most of the time. But that doesn't mean it happens all of the time. We're just trading probability And on the balance of probability, it's most likely that NVIDIA is stuck here. So that's a little bit of analysis. And of course, when you're looking for a signal to sell a stock that you own, very simple. Look for trend lines on the time frame you're trading. And again, you could be day trading. I'll show you a day trade example at the end of the video where we can do this exact concept with day trading. When the trend line is broken, that's step one. When it builds a falling top and breaks down from a falling top, that's step two. And sometimes they happen before the trend line is broken. In other words, it could form the falling top before the trend line is broken. Sometimes the falling top is formed after the trend line is broken. Either way, that's a negative signal. And on NVIDIA, we sort of have that. We have that double top and then a break of the trend line. That's a pretty good reason to think that at best it's going to go sideways for a while and certainly quite possibly lower. All right, let's get into my normal market analysis. We're going to jump into the Stockscores website here. I own this website, stockscores.com. Every week I write a newsletter. It's an email that comes out Mondays. And if you'd like to register for that, it is free. So just click on the sign up. I don't send spam. I don't do a bunch of garbage selling my list to anyone. So if you want that, I do stock picks. I do commentary about the markets, about trading, and it's all free. So I encourage you to sign up for that. All right. So let's begin with SPY, the S&P 500. And we can apply these same principles to this chart. And in the case of the S&P 500 on the daily interval, this is a daily chart, you can see that the trend is intact. And it's always easier, I think, to look at the 3-year weekly chart. And there it's quite apparent that if I draw a trend line and I let it cut across those inflection points, we've had little periods when it's gone below, but it hasn't closed below. There's a bit of a concern because we could be making a double top here. And if we make that double top and then break down through that trend line, I'm going to get a little more concerned. And you can see the sentiment stock score is 62. That's still okay. But you can also see it's fallen off in the last few weeks. So there's a bit of a hesitation there. If we look at the short-term chart, just to get that short-term feeling on the S&P 500, you can see that it keeps hitting its head on this resistance zone, the ceiling price. And we could, draw a line across there, and it got rejected again on Friday. So it's more or less a neutral chart, kind of sideways, kind of choppy, and that's a bit of a concern. Let's take a look at the NASDAQ 100, QQQ. And here you can see a little bit more choppy action on the daily chart. But if we go to the 3-year weekly, still not bad. Upward trend line still intact. And on the 1-month time frame, again, you see that choppy sideways trading. That tells us that investors are uncertain. Anytime you get that sort of choppy sideways trading, that shows uncertainty. And in the last month or so, I would say that that's been the dominant feeling and worthy of some concern, but until the trend line is broken, we shouldn't get too concerned. All right, here is the small cap market. And the small cap market has really underperformed the large cap stocks. Here's your downward trend line. You broke it here, and now we're building a rising bottom. And if we can break up through this resistance line at about 230 on IWM, the small caps may become the place to be. They certainly haven't been the place to be for some time. The large caps have outperformed, but we're starting to see maybe a rotation into some of these small cap sectors that have really lagged. Well, what about the Canadian markets? Here's the TSX, T.XIU. And if I go to the 3-year time frame, you can see that the trend is in place and looking pretty good. Hitting this little bit of resistance there, kind of again got rejected on Friday. If we look at the 1-month chart, you can see that we sold off into the close on Friday, but it at least broke through that resistance zone. So looking a little better than the US markets, but still not perfect. Now, one of the reasons the Canadian market outperformed this past week is because gold has done well, and there's lots of gold mining companies on the Canadian market, and you can see that gold had a great run in January after, its upward trend line there was broken, and then it went into the sideways range for a while, now starting to break out again. Not a decisive break yet. I think it could still pause, but if you're in gold stocks, I think they're good. If you're not in them, there's maybe a signal there to consider, but with caution because this sector is already up so much. You can see here on the weekly chart, the trend is up. We had a little pullback and then broke that 4 weeks ago and now continuing the upward trend. Let's Let's take a look at oil. I like to use USO as an ETF for oil, and let's look at the 1 month chart first. It had had a really nice run into the middle of January, broke the upward trend line, has been sort of weak since then. But again, this is a very short-term time frame. If we look at the 3-year chart, why did it sell off? Well, because it hit this resistance zone. You can see it's hit it over and over again, and it keeps getting stuck there. We've been in this sideways range for oil for a year and a half, and until we can break through that ceiling and then really deal with this ceiling over here on the left, I think it's a market probably generally avoided unless there's certain stocks that can really do well in the group that have good charts, but the sector overall is just kind of neutral right now. It is getting better, and that's an encouraging sign, but still a little bit on the neutral side. All right, how about the US dollar? Let's take a look at the 3-year weekly. And it's a little bit deceptive because we get these gaps in the chart when there's a sort of a dividend that gets paid out, I think, or some kind of a payout on these ETFs. So you have to sort of ignore that. And basically that means that the US dollar is just kind of stuck here at this resistance. Because if you take away that gap, you're basically just stalling in here. So it's still okay. I wouldn't say it's stellar. If we look at the 1 month chart, you can see it's choppy sideways. And the reason for that will come up in a chart that I'm going to show in a moment. But essentially, the market beginning to think that the US will start to lower interest rates again because there's been a bit of some slow economic numbers that maybe justify a drop in rates soon. Of course, this past week, they did not raise rates in the US, and that's one of the reasons why the US market is outperforming, or the US dollar is outperforming. I'll talk about the bond market in just a moment. This is the chart of GBTC, which is for Bitcoin, and you can see choppy sideways trading for the past 2 months. The big picture trend, 3-year trend, is still up, but with some volatility, which shows uncertainty. It's been a little bit of a neutral market over the last month. You can see it choppy sideways, but if you're in it for the long term, I think it's still a hold. If you're a trader, I don't think there's a great trade there yet. All right, so this is one of the most important charts now. This is TLT, which is our bond market. And if this is going down, interest rates are going up. And you can see that it has fallen quite a lot over the last few months. And that is why the small cap market is underperformed, because it is more interest rate sensitive. Now, in the last 2 weeks, we've seen a little bit of a move up. And if we go to the 1 month chart, you can see on the very short term chart that downward trend line was broken. We're now building a rising bottom, and we're just waiting for a breakout from a rising bottom. Now, those of you who are fairly astute will recognize that this chart looks very similar to the chart of the IWM, the Russell 2000 small cap index. And that's because those small cap stocks are heavily influenced by interest rates. And when interest rates are going up, the small caps go down. Now that interest rates may be starting to stabilize, and perhaps we're going to see the bond market go up, which means interest rates will go down, that's a good reason to start thinking about small caps being a place to outperform. It's not time yet. I'm not saying go out and rush and buy the small cap sector yet, but it is looking a little better. All right, so my ratings then, neutral on short term for US large cap, NASDAQ, and US small cap. Neutral long term for US small cap, but bullish in the long term for large cap and NASDAQ. Canadian market and gold, bullish on both time frames. Oil, neutral on both time frames. US dollar short-term neutral, seems to be grinding its way sideways, but still long-term bullish. Bitcoin, same thing. And on bonds, short-term neutral, but still bearish long-term. All right, so now we're going to get into the trade of the week, and we're going to take some of these concepts that I talked about in terms of reading chart patterns and applying it to a very short-term chart, a 1-minute chart. And this is a stock that on Friday I called out in our active live service as a buy right here. Right there. And the reason, a couple reasons. First reason is that it was trading with very abnormal volume. You can see the volume of stock traded right from the start of the day was much greater than normal. This was actually the pre-market here, and if we went back to the previous day, the stock was dead. And then all of a sudden it came alive in the pre-market and made a move up and then pulled back and broke a pullback there. So that's why I bought it. Now you can see that there are action candles here. We call these action candles, these pink and yellow dots. That's how I find these things. I look for statistically significant abnormal price action. And I share those indicators with my active trader students at Stockscores.com. The members of Stockscores that are active trader status can have access to these indicators and have access to my daily webinar where I pick these stocks. If you have an interest in that, certainly go to Stockscores.com to the trader training area and you can take a look at that. Now, we always talk about the sell signal. And in this case, when the trend goes parabolic, see how this curves up and away? As soon as you get a break of that parabolic trend, it's time to exit. So the entry point was here at the white line and the exit was there. What I want to talk about very quickly is what that means in reward for risk. It's important to not measure performance in percentage terms. You know, this stock basically doubled from the entry point at around 52 cents. It topped out at $1.34 actually. And then the sell signal at about $1.10. So essentially a double in just a few hours. But I like to measure it in reward for risk. In other words, the difference between the white line here and the yellow line, that's your risk. And multiples of that are your reward. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. And the exit signal was right here at about +9. That means if you risked $100, you made 9 times risk, you made $900. If you risked $1,000 times 9, you made $9,000. Now it's important when I say the risk, that's not the position size. That's the difference between your entry point and your stop loss point. That's what defines the risk. It's very important. You know, the actual position size might have been $3,000 or $4,000, but still a very nice profit because it doubled in just a few hours. Hope you've enjoyed this week's Market Minutes. If so, click on the subscribe button, like the video, leave a comment. Do you think that NVDA has topped out here, or is it going to be higher in a month? I'd love to hear your comments. Make sure you're registered for that free weekly newsletter at Stockscores.com, and most importantly, trade well.